Hello, and welcome to the May 2022 monthly market update. My name is Ryan Flanders, and I'm the Chief Investment Officer here at the Flanders Group. April was one of the worst months for the market since the start of the pandemic, and as we enter the month of April, many felt that the markets had turned a corner coming out of March, but instead, U.S. markets began to tumble again, declining between 5% for the Dow and 14% for the Nasdaq, while international markets fell between 5 and 7%. Even fixed income was down. There truly was nowhere to hide. Again, with inflation holding at a 40-year high, the Federal Reserve hinted they intended to keep tightening monetary policy. Rising interest rates drove the poor performance and continue to shake financial markets around the world. Now, as a refresher, higher interest rates reduce the present value of future earnings, and this relationship caused growth stocks to take the hit the hardest, as reflected in the steeper declines observed on the Nasdaq. Beyond interest rates, other concerns pressed on the markets. The war in Ukraine continues to threaten ongoing disruptions in both energy and food markets around the world, and COVID cases began to tick back up again during the month, signaling that the pandemic still isn't over yet here in the U.S. While in China, widespread COVID lockdowns raised the threat of additional supply chain disruption, which feeds back into additional domestic inflation concerns. April saw substantially higher uncertainty in almost every area, and that certainly pulled markets back. And yet, despite the market volatility and ongoing concerns here in the U.S., the economic market news was still positive. Hiring remained strong, acting as a ballast to our economy, while supporting consumer confidence and spending growth. The economy continues to weather the storm of worries, and while there are some signs of slowing, the impetus so far continues to carry us along. But will that continue? There is concern with the recent report that the economy contracted in the first quarter. And while that is true, that contraction had much more to do with imports and exports and less with the fundamental jobs and wages, which remain solid. Our initial reaction is this should be a one-time hit. Another concern is on the medical side. While case counts are rising again around the world, the current levels of immunity indicate the damage should be limited. So all in all, so far at least, we see little direct damage to fundamentals in the data. In other words, while real risks remain prevalent, real economic damage looks likely to be limited. That strong economic performance explains much of what happened in April. As long as the economy keeps growing, which it will, the Fed will keep raising interest rates back to much more normal and healthy levels, which needs to happen. Again, higher interest rates mean lower stock prices, which is what we're currently seeing. But as painful as this period is, it will set the stage for future growth, and we are already well into that process. Now, that's not to say we're done with the volatility. Equity valuations are still relatively high, and interest rates will rise further. The Ukraine war could take a drastic turn for the worse and continue to expand, and COVID could surge again. And if those awful things happen, we will see more market volatility. As we've discussed before, though, current headlines will drive short-term market reactions. But despite the headlines over time, the fundamentals are what drive both the economy and the markets. And while we're feeling some pain as the Fed works to return monetary policy back to normal, our fundamentals remain sound. And that's what's most important here. There are bad things that could happen, but most haven't and very likely won't. And as we move on from an extremely difficult month in the markets, the fundamentals still remain sound. While we've seen substantial volatility and there is a case that we will see more, we're redeveloping a very strong foundation to build from and continue to move forward. That's it for our May 2022 update. Thanks for watching. Until then, please feel free to reach out to our office with any thoughts or questions you may have. We will all continue to get through this together. Thank you.